Hey everyone, this is Julian Wong from the Binary Lab, and the last webinar we had a very interesting situation, okay, and that was when we had Fibonacci confirmation on the various oscillators that we use, the RSI stochastic and a couple other stuff that we use in the Binary Lab, showed that the trade is going to reverse, but it didn't, okay. We had a couple of indicators showing that someone was about to break out, but it didn't, and in the end, at the end of the trade, what happened was something very unique, okay? It either barely won, it either tied, or it lost by a very narrow margin, okay? So, when this happens, when everything points to yes, but the answer comes out as no, or like a half-hearted reply, then we know that the market's not really being reasonable with us, okay? And under these situations, very often you may be thinking that, okay, if I did it for 1 minute less or 2 minutes less, I might have won that trade. Now, if you have to adapt yourself to a condition phenomena that happens only less than 10% of the time in the entire year, I don't think that's very worth it. So, by the way, I mentioned about speaking on this topic of how we can correlate dealing with unreasonable people to unreasonable market situations last week, and what a better time to talk about it right now. Okay, so let's say this is where we can take a little bit of real life common sense experience and put it into trading and help you trade better. So, thing is this, let's say, have you ever had to go into an argument at work, at school, or in the family, and you took various pieces of logic, alright, various pieces of logic, or let's say, if you had to argue with an authority, you use various pieces of information and logic to support your cause, but yet they turn it down and throw it out of the window. Have you ever experienced that? If you have, comment below. In fact, if you have experienced situations I mentioned before on the trade, comment below as well. Okay, when you saw a breakout that didn't happen, that went sideways. If you saw a reversal that didn't reverse and went sideways, and let's say when you dealt with people who you gave all kinds of possible reasoning as to why you chose it to do it this way, but they're giving you flack for it. They're not listening to what you had to say. You probably know from real life experience that if you were to continue to argue, if you're going to continue to try to reason, it would be fruitless, because either the other person is not interested to listen to reasoning, or incapable of reasoning, or too insistent of their cause. Okay, and isn't this similar to trading, where sometimes the trend can be too strong? Many people, many new traders often make the same mistake. They have this idea: what goes up must come down, right? Because a lot of the strategies out there are honestly reversal strategies, and there are people who don't use indicators. I mean, God bless those who don't use any form of indicators at all. I'm even I'm not necessarily chart indicators, but let's say people who use previous highs and the trend lines and channels. There are some people who don't use any of those things, right? And I mean, generally, the very amateur traders out there who may have got some silly guy from a pop-up program behind your window when you're browsing, say, "Oh, we're going to teach you this strategy. Look at the chart. If it's been going up for the last, if it's going up, the chart in that small box in the broker's window has been going up and up and up. Now's the time to sell." And everything going up and down. So it's like, by the way, not every ascension is going to have a reverse, regardless of the steep angle. Okay, sometimes it can be very steep and still climb. Okay, so sometimes it can be unreasonable. Sometimes it can. And sometimes it can be incapable of reasoning. Incapable of reasoning is when, let's say, the market is going sideways. When the market is going sideways, that's incapable of reasoning, because at that point of time, there's a group of traders who say yes, it's going to go up. There's another group, an equal amount of traders who say yes, it's going to go down. And the result of that is that a tension between both. That the only reasonable kind of way to profit from the market is very, very tight 30-second, 60-second trading, which once again may not be the best decision personally, I believe if there's an equal chance of win or loss, then it's not sensible to continue. All right, and then of course, um, when the third scenario is when the market is not keen to do any kind of reasoning, and that's when you see long tails, right, long candle wicks on both sides, like Monday this week. Ridiculous. Not just Euro JPY, pound yen. These ones are famous for that kind of price action, but just about every pair was doing that. Even the USD CHF. So under these situations, would you try to reason with an unreasonable market? What do you do? An unreasonable person is right in front of your face, and you've been going at it. It's like, okay, you know what? I give up. Out of here. So that is what you do when you come into a trading session. So remember this, okay? So there will be the days when you trade and you get that kind of situation. What do? Look at your winning percentages. Definitely you don't want to be doing martingale trading, because sometimes you can see, oh, awesome opportunity, only to see that your trade's being shot down, and then that's when you don't do it. Okay, when you see that your winning rate, your winning percentage, okay, if you're just about winning and losing an equal amount, then there's no point to continue, because usually, I believe this, in the first 2 bars of a trade, all right, if you're trading anything longer than 2 bars, in the first 2 bars, it will often allow you ample confirmation as to whether your trade is going to work or if it's not going to work. Okay, so if your percentage is dropping, stay out, and if if let's say you're winning barely, it's a good idea to stop as well, because you know that even if the market range is very thin, visually you can see that if you're supposed to be winning, it should look fairly significant on the charts as well. Okay, so I hope you found this video very helpful. And by the way, if you need some guidance in how to apply what I've mentioned into your chart trading, and you're not already a member of the Binary Lab, then go check out the link beneath this video and sign up, because I actually do live trading webinars every day of the week when it's reasonable to trade. So I do cancel webinars when I find the market is bad, and sometimes when I start the webinar and after a while, if things are not going quite to plan as well, I stop the webinars too. So sometimes people know that trading is a skill, but at the same time, a lot of people forget to recognize that it's equally important to recognize when to stop trading as well. So if you're not already in Binary Lab, come into the Binary Lab and find out through live webinar scenarios when it's the best time to stop trading and when it's the best time to keep it going. I'll see you on the inside. If you find this video valuable, share it with your friends. Bye for now. This is Julian from the Binary Lab.